This voice is taken from an article with the title, How to Interpret Changes in Government Spending on the Economic Calendar, which has been published on TraderTalks.net. Government spending is an important component of the economic calendar, and can have a significant impact on the performance of a country's economy. Changes in government spending can indicate the direction of the economy, and can have implications on the markets. Changes in government spending are typically released by government agencies or central banks, and can come in the form of data such as GDP, unemployment figure, or changes in government debt. The most important way to interpret changes in government spending on the economic calendar is to look at the overall trend. If the government is increasing spending, it is likely that the economy is improving and the government is trying to stimulate the economy. On the other hand, if the government is decreasing spending, it is likely that the economy is slowing down and the government is trying to limit the fiscal deficit. It is also important to look at the type of spending that is being adjusted. For example, if the government is increasing spending on infrastructure, it is likely that the economy is improving and the government is trying to stimulate growth. On the other hand, if the government is decreasing spending on social programs, it is likely that the economy is slowing down and the government is trying to reduce its fiscal deficit. In addition to looking at the overall trend, it is important to look at the magnitude of the changes in government spending. If the changes are dramatic, then it is likely that the government is trying to make a strong statement about its economic policy. For example, if the government increases spending on infrastructure by a large amount, it is likely that the government is trying to send a signal that it is committed to stimulating the economy. Finally, it is important to look at the timing of changes in government spending. If the changes are released during periods of economic growth, then it is likely that the government is trying to support the economy and encourage growth. On the other hand, if the changes are released during periods of economic contraction, then it is likely that the government is trying to limit the economic downturn and reduce its fiscal deficit. In conclusion, it is important to interpret changes in government spending on the economic calendar by looking at the overall trend, the type of spending that is being adjusted, the magnitude of the changes, and the timing of the changes. By understanding all of these factors, investors and traders can better anticipate the direction of the economy and make more informed decisions about their investments.